as we've discussed previously about Ripple, XRP, target numbers are not out of the question. In fact, they are very possible in the context of a clear positive scenario. One of these numbers, frequently mentioned in previous analyses, is the $50 level. This number only comes up in one case: if the currency begins strong, interconnected upward waves, and succeeds in forming three typical upward waves. Ripple has already formed the first wave, followed by two more upward waves. But the real question is, are the market and investors truly prepared for the decisive third wave? Technical analysis indicates that Ripple, like other cryptocurrencies, follows regular cycles of rise and correction, or what are known as impulse waves. If we assume that Ripple intends to form three major upward waves, then reaching the $50 level would be at the end of the third wave. This requires very strong momentum, high market confidence, and coincides with a decline in Bitcoin's market dominance. However, what we are currently observing is that the second wave has been significantly delayed. Ripple has been in the accumulation zone for a month or more, and this delay has a relatively negative connotation as it weakens the expected upward momentum of the third wave. In previous instances, when the price was clearly on the rise, it would not delay the rise for more than 2 or 3 weeks at most, then continue its path in a rapid and successive manner. Now, however, we are witnessing a prolonged accumulation period, which warns that the third wave may be shorter or weaker than expected. Based on this, we are talking about a highly probable scenario. Ripple may rise to the $5 or $6 area, then enter a sudden correction phase, taking it from this peak to lower levels, such as $1.8 or even $1.2, or perhaps even slightly lower. Then it will begin a new accumulation, launching another momentum wave, and perhaps achieving even higher numbers if market conditions are right. This pattern is not unique to Ripple. It is a broader scenario that encompasses the entire market. If you see this delay in Ripple, it reflects what is happening in other currencies. The entire market is waiting for a clear break in the bull run and a sharp decline in Bitcoin's bull run, allowing strong liquidity to flow into other currencies. However, what's happening now is slowness, consolidation, and a clear lack of collective buying power. Therefore, it's important to monitor the weekly candles closely. Any weekly candle that closes in the red, in the $5 to $6 range, is a signal to exit and wait. We shouldn't stay in the market if we notice that the upward momentum is starting to weaken. as the likelihood of a correction will become high. If we see weekly candles closing at the same levels without a clear rise, this is a sign of strong resistance and that buyers are starting to lose control. Therefore, we shouldn't risk the profits we've made. Anyone who entered at the 40-cent level or even at $1.70 should be cautious and not underestimate the possibility of another decline. The moral here is, don't stay in the market just because of hope. The market is unforgiving. No one can guarantee the continued rise, especially if signs of weakness begin to appear. Don't risk months of profits because you dream of bigger numbers that may only come after deep corrections. The technical pattern we're following now is a common occurrence in cryptocurrencies. A long period of accumulation, a moderate rise, a correction, and a final momentum wave. But the difference between success and loss lies in when to exit and when to enter. Therefore, it's crucial to carefully monitor the next upward wave. Monitor the behavior of weekly candles and use them to judge the overall trend. Any red weekly candle after a strong rise indicates that we may be at a reversal point, possibly the end of the bullish cycle. Therefore, it's smart to take profits gradually, not all at once, and not wait until the bullish momentum is completely over. Also, the impact of Bitcoin's bullishness cannot be ignored. The market doesn't move independently. If Bitcoin's bullishness rises again, it will negatively impact other currencies, leading to a sharp correction. However, if Bitcoin's bullishness declines significantly, as we hope, it will push the entire market higher, sending all currencies to record highs. Ultimately, the market isn't as difficult as it seems. The real challenge isn't the current correction, but managing the next upswing. Will you be prepared to act? Will you know when to get in and out? And will you protect your profits? All of these questions will determine your fate as an investor or trader in this volatile market. One final piece of advice. Don't just focus on dreaming. Continue analyzing. Monitor the market. Watch for acquisitions. Watch the weekly closes. And beware of impulsiveness, because the market waits for no one.